Hello! Today we will be discussing two different forms of the income statement. The simpler of the two is called the single-step income statement, which simply lists all of the revenues and then all of the expenses and takes the total of the revenues and subtracts the total of the expenses to get the net income. We call this the single-step income statement because there's one step in our calculation of net income, the total revenues minus the total expenses. The other form of the income statement, which will be the focus of this video, is the multi-step income statement. This will calculate the same value for the net income as the single-step income statement, but a lot more detail will be given. So next we're going to build this multi-step income statement from scratch. So here we have the adjusted trial balance for this company, which lists all of the accounts as well as their debit or credit balance. Our first section is sales revenue, which is where we're going to list all the accounts related to sales. So if we look at our adjusted trial balance, we see we have the sales account right here. We have all of the returns and allowances related to those sales right here. And a little further down, we have the discounts related to the sales. So we can copy those over into our sales revenue category. And we put the returns and allowances as well as the discounts in parentheses here because they decrease our sales. So we can find the net sales by taking the sales and subtracting the returns and allowances as well as the discounts. So we get a net sales balance of $37,325. The next step is to subtract one of our biggest expenses, which is cost of goods sold. So if we look at our adjusted trial balance, we see our cost of goods sold is right here, and it's for $14,000. Now if we take our net sales and we subtract our cost of goods sold, we'll get our gross profit. So our gross profit is $23,325. You can think of the gross profit as our profit before any of our additional expenses have been taken care of. So this really just considers our biggest expense to the company, namely the cost of our inventory, or cost of goods sold. Next we have operating expenses, which can be broken into either general and administrative expenses or selling expenses. General and administrative expenses are expenses that are not directly linked to any specific function of the business, but rather are there to maintain a company's operations from day to day. This is usually tied to any expenses that might be linked to an office building, such as salaries for the office workers or rent on the office building. So looking at our adjusted trial balance, we see we have the office salaries expense, so we'll need to include that. We also have depreciation on the office equipment, so we'll include that as well. We have insurance expense, which is not related to any particular function of the business, so we will include that under the general label. And finally, we have the office wages expense, which will be included as well. So once we have all those listed, we can total those up. And we get our total for general and administrative expenses to be $6,650. Next, we move on to our selling expenses. The selling expenses are expenses that are somehow related to marketing or selling the product to the customers. This would include things like advertising or the wages for store employees. So looking at our trial balance, we see we have advertising expense right here. We also have salaries for the sales employees. And if we look down a little further, we see we have the store wages expense right here. And we also have depreciation on the store equipment. So anything related to store is going to be included in this category since it's related to selling. So we can copy those labels down. Now if we total all of those up, we'll get the total for our selling expenses, which comes to $6,275. Now if we add up our total general and administrative expenses to the selling expenses, we'll get the total for our operating expenses. So our total operating expenses are $12,925. Next, we can calculate our next income subtotal, which is income from operations. And we find that by taking our gross profit and subtracting our total operating expenses. So we get an income from operations of $10,400. Finally, we have a section for the other gains, losses, expenses, and revenues. This is going to be a catch-all for any accounts we haven't used yet that go on the income statement. Now, there are many accounts on here that don't go on the income statement, such as assets, liabilities, and equity accounts, which go on the balance sheet. So we're going to leave those off. But if we look closely here, we'll notice we have interest revenue and interest expense. So those are definitely going to be needed. And a little further down, we have loss on sale of equipment. And you should be able to verify that any of the remaining accounts are going to be balance sheet accounts, and therefore we don't need them on the income statement. So we can copy those down. So if we add those together, making sure you count the expenses as negatives and the revenues as positive, then you get a total for this section of negative $850. So our final step will be to take our income from operations of $10,400 and subtract our total for the other gains, losses, expenses, and revenues to get our net income. And so we see our net income is $9,550. So the key takeaway for the multi-step income statement is just that we're going to have a lot more categories here, and we're going to have a bunch of different subtotals for our income, such as net sales, our gross profit, our income from operations, and then finally our net income. Now we can move on to the single-step income statement, which is pretty easy to make once you have completed the multi-step income statement. So I'll show you how we can do that here in just a moment. So a reminder that the single-step income statement is simply going to list all of the revenues, list all the expenses, and then subtract those in one step to get our net income. Now we're not going to do all of the individual accounts here, but we're going to do some more of the totals just to make this a little bit more compact. So for example, the revenues, we're going to start with the net sales of $37,325. And then if we scroll down, we can also grab the interest revenue. And I believe those are the only two revenues that this company had. And that one's for $700. And if we add those two together, we will get the total revenues. For the expenses, first we're going to take the cost of goods sold, which is $14,000. Then we're going to move on to the general administrative expenses and just take the total here. Same idea with the selling expenses, just take the total. Moving on, we also see we have the interest expense and the loss on the sale of equipment. So we can total all of those up. And if we add all the expenses together, we get a total of $28,475. We can take our total revenues and subtract our total expenses. So this is what we call the one step in the single step income statement. And if we do that, we get net income of $9,550, which is the same thing we got when we did the multi-step income statement.